Thank you so much for joining us on the Dwelling Show. I'm your host, Ola Dantes. I've got Whitney with us today. Hey, Whitney, how you doing?
I'm doing great. How are you? Thanks for
Um,
having me on.
no, it's my absolute pleasure. We are just talking before we started running the cameras here, but we know each other a little bit. We've been in our conferences together. We never got to meet in person, but really excited to have you on the show today.
It's my pleasure. Yeah, it's always great. Like when you're like, I know you.
Right,
I
right.
know you. It's always great
Yeah.
when you have those connections.
No, that's awesome. That's awesome. I mean, it's a small world. So yeah, I'm glad you come on. So yeah, definitely for our listeners, tell them a little bit more about who you are, what you've been doing, and kind of what you've been up to lately. Actually.
Well, so I'm a real estate investor, in case you couldn't figure that one out from being on the show. But yeah, so I invest, primarily in, I have a couple prongs to my investing portfolio. I invest in small single family and small multifamily, just kind of as the base part of my portfolio. And then I also participate in the active side of real estate syndication and also drink my own Kool-Aid. I invest as a limited partner as well.
I was just taking some notes. Okay, that's a lot. I like that. I like that a lot. So you kind of like, up and down the ladder in terms of asset class, single family, multifamily. So I think a good way for us to kind of tie all this together is just give us a story of kind of how you got started, right, in the real estate investing game. And actually, more importantly, why did you get started in real estate?
Well, it was entirely by accident. So the why came to me. I didn't have a very strong why when I first started out investing. So, we go back to 2002. Trust me, I'll keep the story short. But I, bought a house with a significant other, and about a month after we closed, the relationship fell apart. It was a house we had strategically bought, a house that needed some love, so we could force the equity. That part we kind of had. But once, the relationship dissolved and he moved out, here I was like, oh my goodness, I've got this house, I have these bills, I don't know what to do. I mean, I knew how to change the tire on my car, but like, replace flooring and, hang kitchen cabinets. I had no clue. So, I stuffed the property full of roommates who didn't mind living in construction zones. So, I guess the term now these days is house hacking. And then I went to Home Depot and I bought the Home Depot 1, 2, 3 book. I mean, we didn't really have YouTube at that point in time. And just started teaching myself, some of the things that you needed to do to repair a house. Um, you know, had some success, had some failures, and all that. Learned some important lessons. I never will do drywall again, and will never touch my own plumbing. Those both can be great disasters. But fast forward 11 months later, I made $52,000 when I sold the property. Actually, that was probably my mistake selling the property. We can go into that here in a minute. And but I had been actually not paying for my housing bill and in fact making $300 a month. And I just thought it was the coolest thing since sliced bread, and real estate was amazing. I was like, how many more of these projects could I possibly do? And my next project, fell flat on my face. Wolf. By the end of the second project, I had broken even. I didn't completely lose money, but let's just say it ended with a school bus falling into the roof of the property. Anyways, by this time I
Wow.
had met my husband. That whole story needs to happen over like a nice strong beverage. But anyways, but I had met my husband and he was like, oh great, you're finally done with real estate. I'm like, no, I got to figure it out. And I was like, I'm going to move forward. I'm going to get the next property. And he just thought it was crazy. And fast forward a couple years, we did a couple more live-in flips, and then that's when we realized we wanted cash flow. So we got into buy and hold rentals. And then, I think like it was a very much of a glide path. We built up a portfolio of 30 single family homes. Some of them turnkey, some of them buy and hold just straight off the MLS. And then most of those were rehab or what you call a burr property. So we were really able to accelerate our portfolio growth by just recycling the same capital over and over again. And sat down with my husband one day and said, hey, we got enough passive income coming in. I would love to take time back to spend with our daughter. She was really young. And he said, I want that too. I'm like, oh, nuts. We hadn't planned for it. So I quickly did the math in my head, meaning we needed to get to 80 properties. And I'm like, we need to go about this a different way. So that's when we transitioned into multifamily investing. And, in the process of putting together our own multifamily team, did a couple of active projects that way. That's when we discovered the power of passive investing and just how could we harness the equity and cash flow out of our current portfolio to continue to build passive wealth.
Oh, wow. Thank you so much for sharing that story. I mean, kind of the ups and downs and how you came out on top. Really, really commend you on that. Just, I mean, I can just imagine you going to Home Depot, buying these things and actually just doing the work, like just the sheer determination. I think that's, no, honestly, that's like super inspiring. So yeah, I just love that story. But I kind of want to go back to some of the things that you said. So you sold that property and you said that was a big mistake. I'm guessing you tell us why. And then you said you broke even on the second property. Most people would have just stopped right there. I mean, they could have stopped at the very first property. What kept you going on? And you want to talk a little bit about, why you felt like you made a mistake selling that first property? I think I know the answer, but I want you to talk. I want you to say
You want me to admit it live? Okay, I get it. Well, I think part of it is, a lot of this goes back to my mindset. I grew up in a military family. Majority of my family was in the Air Force, and then I had one uncle that was in, the armed forces, and so, there was lessons in learning. There was no failure. So I think even just kind of having that mentality, and then I'm not 100% executing like that every single day. Like I have to continue to cultivate that and condition that. So I've always been trained to ask the question, something goes wrong, it's like, oh, how can I make this, how can I make it through? Maybe I don't, maybe I didn't continue buying houses, but like, how can I make it through and just not become, let life happen to me? Well, so the mistake, you called me out. Like I said, selling that first house was a mistake. I should have kept it as a rental. I didn't know that I should have refinanced out and pulled my
yes.
capital to go buy the second property. That was a huge mistake. I could have accessed that same $52,000. Maybe not all 52K, but majority of it. I could have moved out, stuffed another tenant in there, and moved on to the second property. So I didn't know that. Bigger Pockets wasn't around to tell me that was the strategy that we should be following.
Right.
So, thank goodness now that there's so much education out there about that. And then in the second property, I think that was a little bit of me just being kind of not knowing what I didn't know, but thinking that I all had it figured out. I bought in the wrong location. I bought a mountain home that was outside the city limits. And not that that's bad, but I didn't know what I didn't know. It had 19 steps to the deck. And so, I immediately cut my exit strategy. Most people that buy mountain homes, like that are retirees. And I mean, I can't tell you how many times we showed the house and somebody would make it halfway up the steps and they would just go, nope, this isn't the house for me. And they turn around and leave. They've never even made it in side the door. So just, not knowing what I, should have known in getting into real estate investing. But yeah, ended up breaking even after holding the house. I did do a few things right. Still had roommates on that property. Again, was able to buy low and force equity on the sale. So I still
Wow.
did a few things right, but it did not didn't go like how I planned it. I was expecting to walk away with another 50 to 75K. That did not happen.
Yeah, no, I'm glad. I'm glad you kind of continue, in your journey and you didn't just stop there. But I think the other thing with real estate is I think it's forgiving, right? If you hold on a little bit longer, I think it's forgiving. And that's also another thing we don't talk about a lot in real estate. It is quite forgiving. So I'm glad you still broke even.
I know, I think that's, what I work with investors, beginning investors, and there's a lot of fear setting in that you have to do when you first get into real estate. And part of that is mindset driven. The other part is just really mitigating that bottom side risk or the downside risk. And here it was just like, if I had to leave, I could have left and I knew I could rent that property nightly. I had at least had that much knowledge about that. I'm like, I could have rented it nightly, weekly, or yearly. And so, I think, as you said, real estate is forgiving, but I think part of that is just understanding how can you mitigate risk and just kind of, be like, if this is the worst situation, I'm okay. Right.
Right.
Like,
Right.
I have a couple of people right now that have vacancies throughout the winter and they're freaking out. I'm like, okay, how much is your payment? They're like $700 a month. I'm like, times how many months do you think it'll be vacant? And they're like, maybe 4 months, worst case scenario. I'm like, okay, go to sleep. That's
Right.
$2,800.
Right.
I'm
Right.
like, why are we stressing?
Yeah.
You'll make that up in a year, you
Right.
know?
Right. Yeah. Awesome. So after that, then you've just continued to buying, like you said, single family resident, buying holds. You had about 30, and then you were like, I think we should need to like do this a little bit differently, right? So when you had that thought of going into, into apartment investing, what did you actually do from a tactical perspective? And the reason I asked that is if there's somebody listening to our conversation and maybe they're at that stage, or maybe they want to skip that stage, what would you say to that person to do first?
Making that transition from single family into like multifamily.
Correct.
I think you have to be really understanding of what your time involvement is, and what kind of strategy that you want to do. Like, I think you have to go back and reprioritize your goals. Like, what is it? So if we start back at the beginning, do you need cash flow, appreciation, balance, blend of both? What kind of time involvement do you have? Do you want to be active? Do you want to be passive, or somewhere in between? And then, then we get down into the tactical part, like selecting markets and figuring out if that particular strategy is in that market. Now, you could go, getting into multifamily, I think some people have a perception like you need to go buy a 10, 15, 30, 50 unit building to be considered a multifamily investor. No, multifamily can be as simple as a duplex. So maybe you reposition a couple of the properties in your portfolio and into a duplex, and then the next one into a quad, and then the next one into an eightplex. You can still continue to take a gliding path that way and scale very quickly. Okay. Some people just want to rip the band-aid off and they're like, I want to go buy like, raise $20 million and go buy like a 150 unit building. And you can definitely do that too. You're just going to need more, a larger track record. And if you don't have it, borrow it, by working with other investors. And then, of course, you're going to have to set up a larger business to be able to raise the capital to succeed at that.
Yeah, I love it. And I kind of like the way you got started. So maybe let's just kind of talk about your very first. So you've done, really well in the single family space. You made that shift. You got the right partners. So just kind of talk through your very first large deal. Like, how did you find it? How, what was your involvement? Just kind of talk us through the deal. If you have the numbers too, you can throw those in there.
Yeah. So I actually, we built up the portfolio of 30 single family homes. And at that point in time, we're making the transition into multifamily real estate. And I actually had a couple syndications in my self-directed IRA. We can argue all day long, should you invest in syndications in an IRA, but anyways, they were there. And I'm sitting here trying to put together my team and evaluate numbers. And I keep looking over at these syndications and what they're returning. I'm like, man, this is amazing. Like, I'm not able to really beat this, what they're giving me. And, I was just like, how can I take advantage of that? Because that was very time leverage. So I actually started out as a limited partner in syndication before I got into the active side. So I was like, okay, I want to get paid to learn. I don't want to pay to learn. Now, that's not a strategy for everybody. I think at some point in time, you need to, invest in yourself and mentorship, in order to, make this transition very smooth. But for me, I was like, how can I get paid to learn? So I sought out the best operators that I possibly could. And, because we had built up this base portfolio, we actually did qualify as accredited investor. So I had I had that in my back pocket. And you certainly don't have to be an accredited investor for this strategy to work. And so I went and partnered, invested in a couple of syndications, like 4 different syndications, 4 different operators. And I wanted to know everything I possibly could about the operators, the markets, the deals, and really dive in. And one of those operators actually they were expanding their business and they started hiring people. And I ran into the 2 partners that I work with currently, Annie Dickerson and Julie Lamb, at a conference in the women's bathroom line. Really weird.
And they're great. They've both been on the podcast, both
Yeah.
Julie and Anne. They're awesome.
Yeah, it's great. Yeah, so the partnership is Good Egg Investments LLC, and funny enough, most of these conferences that we go to, real estate conferences, are very male dominated. So the women's line to the bathroom is very short. You usually figure out who all 15 or 20 women are at the conference very quickly, and so you just are able to network, pretty quickly and build up those relationships. And so that's really how I got started on the general partnership side, was working with them. Since then, I have backed into kind of filling out that missing middle in my portfolio. And we haven't bought. We did buy one JV deal, a 51 unit building in Beech Grove, Indiana. That one we repositioned, 2 years ago. But currently, we offer on portfolios of properties, duplexes, quads in Kansas City, Missouri. And our last offer, still out right now, was a $1.5 million 20 unit deal in Kansas City.
Nice. I love it. I love it. This are just like great, conversation that we can keep going on and on, but we're definitely dwelling into the quick rounds. These are going to be quick questions, quick answer. You ready, Ma?
I'm ready. Let's do it.
All right. First question. What makes Whitney unique? What is that differentiating factor that separates you from the next guy or the next girl?
Ooh, you know, great question. I think, for me, it's just the mindset shift of, like, how can I make this a win-win? I'm always trying to look through the lens of any deal, even when I'm buying from a distressed seller. Like, how can I make this a win-win? It's not all about the money, right? It's I want to build lasting relationships and partnerships with people. So win-win, I would say, all the way.
I love it. I love it. Second question. What was the last book that you read and what was the one thing you picked up from that book?
Oh my gosh, I just finished The Happiness Advantage. And that book, have you read that?
I know I've read the happiness hypothesis. That's what I,
Oh,
yeah,
I'm
yeah,
sure there's probably some similar,
yeah.
connections between the books, but it's really, I think, and I run into this with newer investors. They're framing life that, like, if I hit this cash flow number, then I can be happy, then I can live life. And it's really, how can you live life by intention and seek happiness first? Because if you are already happy, I'm not saying you have to be content, very different, right? But if you already find joy and happiness with where you are at life, any progression you make is
A
huge.
bonus. Yeah,
Yeah, huge
yeah.
bonus. So we've already been living those principles in our family, in our life. But that was just such an amazing book to have it, kind of reinforced.
Yeah, no, I've got to check that out. Yeah, because the happiness hypothesis is one of my favorite books of all time. It's just an amazing read. But I'll definitely check that out.
Yeah.
Yeah. Last question, like you said, you've got your family, you're busy with, your passive investments, your active investments, but what do you do for fun?
When I when I'm not injured, I'm actually injured right now. I'm like, oh, stab me in the heart. No, actually, I love trail running and mountain biking, and climbing. We go camping. Last year during COVID, we went camping, I think, 30 days throughout the summer. We just love spending the time outdoors. But trail running and running, like, high altitude half marathons, is kind of my shtick. That's what I love doing.
Wow, wow, yeah. I try to run, most days, but it's so cold right now, so I just walk, in the afternoons when the temperature drops a little bit here in Houston,
I
than doing it
know.
in
We
the
were talking
mornings.
before the show. I will take 0 degrees and sunny in Colorado any day of the week over 35 and, like,
Yeah.
humidity in Houston. No
It
way.
is. Yeah. It's a unique place. So if there's anybody maybe there in Denver market or anywhere in the country, and they're like, oh wow, I want to connect with Whitney. What's the best place people can reach out to you, get to know you more?
Yeah, absolutely. So I have a website, ashwealth.com. So ASHWEALTH.com. You can also reach me at ashwealthco, for Colorado, at gmail.com. And so you can reach out to me there. And I would love to talk to anybody if you're thinking about starting and getting into single family or small multifamily investing. And then, you can also find me at Good Egg Investments if you want to talk more about larger syndicated deals.
Whitney, thank you so much. Really appreciate your time today. Thank you, thank you, thank you.
You're very welcome. It was such a pleasure. Thanks for having me on.